The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. We'll just do a short recap today for Mindset Reset over some of the pairs. We had some large moves. I'll go over a longer technical video later, but we'll talk about Free Cash Friday today and just the opportunities that presented and the different signals or potential triggers that traders may have noticed heading into the session. Now we're looking at gold, and we had major red news at 8:30 and 10 a.m. today. During the London session, the market had broken out, made a high, traded back above that high prior to our U.S. window. Now, if we zoom in here, again, the process is just about sitting on your hands and waiting. We had major red news. We had a lower low established in the first hour. So if you haven't done so, go back, watch the video on the site about first hour putting in a high and a low. Second hour, before the second hour opens, we go lower again and then pump up into that middle hour, the New York open hour, back up into the high of the day. That second hour then coiled, and several traders hit the pump and dump prior to the 10 a.m. news, and that market broke down again lower as we headed into our third hour. Now, we talked about gold giving third hour trades, lower lows, lower highs, and we have our high of day level triggered. Longs are in the market. We have our three levels that we talk about, high of day, low of day, closing price. It's Friday. The market has been working the high, lower lows, pump, breaking down, pump, major red news. We have an engulfment. This is a 5-minute chart, and there's our starter. So as I've talked about, we put our basic entry criteria on the chart, and that market now is a go for entering in and targeting closing price. Now you'll also notice that we have a gap, and I've talked about this before. That area is sort of the target area for getting filled once we have a thesis. And as one trader asked, where's the coil? Well, the coil is inside of our EMA after major red news. That gave traders, depending on their fill, an easy 75 to 100 pips back to closing price. A zero stress, no heat, simple trade on Free Cash Friday. If we just go back and look at our chart from Monday, day 1, Tuesday, day 2, thesis was that they potentially now have locked in the low of the week. One of those extremes will tend to hold. Wednesday is our midpoint range of the week and a reset. And as traders notice, we had a first red day close, but this is just a red day close. We triggered shorts. We had a third hour parabolic. And if you go back and look at the previous Thursday, we had a short squeeze parabolic heading into Free Cash Friday as well. Higher highs on the inside. That market traded back up to those highs. And zooming in, 30-minute chart, again, prior to our 11 a.m. major red news, we have pins up top. So just some little signals. Are they working the high? Are they working the low? High of day back to closing price. And looking at our indexes, we had large moves on Thursday. The DJ30 broke out and was still out of balance heading into our U.S. session. We're in the middle of no man's land. They potentially could go either way. We had major red news at 8:30. Simple process, again, marking off highs and lows. Recognizing that we're inside of a large range, if traders were to trade the index after major red news, that establishes a range expansion high. The market creeps down into the New York Open in 3 pushes into the low of day level before engulfing at 9:30, giving traders a dump and pump, nail and bail opportunity on Free Cash Friday. Again, just simple process. Major red news at 10 a.m. The market closes at the high as major red news is released. Again, a catalyst opportunity. Traders could have easily been out of the market before the news was released. This was a 100 pip range between the opening of the New York Open and the high of the day. Similar template on the NASDAQ as well. Again, a pin high that establishes a range expansion just underneath the high of day from Thursday. And that market creeps down into the low of the day at the New York Open for an explosive reversal back to high of day. Nail and bail opportunity on the NASDAQ. West Texas and spot crude, similar. We had established a high and a low. So if we just back this chart up, we'll go to a 15-minute to show the range. We're just, again, closing price becomes our auction area, establishing a high and a low heading into our New York session. First hour expands the range before coiling sideways. An example, again, Peter Brandt talks about a pattern within a pattern, a rectangle up top. A New York Open engulfment at the high of the day. That's 90 minutes of working the high for a pump and dump short back to low of day. A 50, 75 pip target from high to low. A simple nail and bail trade on Free Cash Friday on oil. Low-hanging fruit opportunities on some of the cross-rate currency pairs, as I've mentioned before, on days where there is major red news for U.S. markets. I will often look at the cross-rate pairs. Now, we had a beautiful, so coming back to the process, day 1, day 2, day 3, Wednesday is the midpoint range of the week, which is a reset, and that gave traders a first red day on the backside. So again, resetting, so traders will ask, well, it's not really the first red day, but we're on the backside of the week. So that's an important thing to understand, and we pump up into the close on Thursday heading into Free Cash Friday. We'll just drag these levels across. So you'll notice that we're still in a trading range underneath of Tuesday's closing price. The market breaks down in our London session, a lower low at the low of the week. The lower low at the low of the week, and the pump heading into our New York session. Low-hanging fruit is the trend continuation trade. Our universal entry criteria is pretty straightforward. This is not too dissimilar from last week's NASDAQ trade on Friday. We'll look at that in a moment. Again, the pump. So zooming in, just understanding the session opens, we pump back up into our EMA. The market has already broken out. The low of day level now becomes a potential ceiling in a market that is broken down. The pump and dump template, we have a 1-bar stop. This is a 5-minute chart. We'll just highlight this. Any area above here, we've got our candles, our 3-candle. If traders shorted the collapse, we're already in a broken down market. So we're already in a market that's broken down, lower lows, lower highs. We want to be shorting on the pump back down in line with our dump. A zero stress, no heat, zero emotion, shorting opportunity on a cross rate pair, even though there's major red news in our U.S. window. And just looking at the NASDAQ in closing last Friday, we had a similar pattern. The market broke down, lower lows in Asia. They broke down. They pumped it up into the low of day level just prior to our New York session for the pump and dump template on a Friday. Now, often after really large moves on a Thursday like that, and we're heading into Friday and we're inside a narrow range again, the 3-session setup, we just reestablish our boundaries. If we're trading around or inside of highs and lows, that market, if it offers asymmetrical risk reward in terms of its high-low range, can still offer traders a great 3-session setup. Pump and dump and pump, same thing we go over, and our basic model for trade entries, keeping it simple, zero stress, and also the low-hanging fruit trend continuation trade, page 96 in the playbook, an example on the cross-rate pairs today, and just nailing and bailing on a market that had opportunities for session trades and keeping it simple heading into the weekend, traders. So stay focused, keep it simple, enjoy your weekend. We'll have a longer technical video over the weekend. Again, just mastering the process. Keep it simple, sitting on your hands, pump and dumps, dump and pumps, 3-session setups, and 3-day setups. Keep it simple, and may the markets go with you.